Financial literacy is all the rage of a buzzword. And it sounds like something that you have to go to school for. Financial literacy, it just sounds like a college course. But the reality is there are some common sense things associated with financial literacy. And if we were to break it down into just simple terms, it's really just about how you understand and manage your money. Now, there's 5 categories that I want to share with you that can really expand your lifestyle if you change how you think about these 5 categories. So let's talk about number 1, making money. The concept around financial literacy, around making money, at least for me, when I first got it started on my journey to eventually becoming a millionaire, one of the things I looked at when I was just working a normal 9-to-5 job is understanding how I was making money. And most people make money by basically exchanging time for hours. So you work 8 hours, you get paid for 8 hours. But once you understand the financial literacy part attached to that, there's an emotional component to working your job. So for example, I remember when I was working my job and someone would get upset at the manager or upset at the boss, and they would say, you know what, I'm quitting my job after I come back from lunch break. And I thought that's not a financially literate thing to do, because if you quit your job, your bills don't stop. And so you still have bills to pay after you get your final check. And if you can't get another job and work the 2 weeks in the hole and get another check before your bills start to come in, you actually hurt yourself more than you hurt your company or more than you hurt your boss by quitting your job. And so when people would say stuff like that, I would think, man, they're not financially literate or understanding the impact of what this decision is going to do to their finances. And that's what financial literacy is about. It's really understanding money and understanding the impact of your decisions and how that's going to affect your financial future. On the other side, when I was working in the cell phone store, I remember standing in the store and I was selling cell phones, and I would say, man, I want to apply to be a manager someday. I want to move up the ladder. And, you know, some of my teammates would joke and be like, oh, you want to be one of them? You want to get into management? And they would kind of talk down on being in management. But what I saw was not necessarily that I wanted to be like anybody or separate myself from anybody. From my financial literacy standpoint, I understood that if I could increase my salary and kind of remove some of the commission, because I was a commission-based sales rep. So what would happen is if I would go on vacation, I couldn't sell any phones that month or that week. And so it would put me behind in the hole and I would have to work extra hard when I came back. But if I moved up into management, I became more salary. When I would take a vacation, my salary would be the same. Now, the pros of that is that my base amount of money wouldn't fluctuate so much with commission. But on the other hand, I used to love commission because I could sell more phones and hustle and increase my earnings. And so that's where the financial literacy comes into place when it comes to making your money. Sometimes making your money may be better made as a commission job. Sometimes making your money may be better financial literacy speaking from moving up the ladder and getting into management and raising your base. And so what would happen is as I raise my base, becoming a manager, I now knew I could count on X amount of dollars every single month. And then I could go start a side hustle. And so that's another thing. You could also start a side business or some type of driving Uber or something on the weekends. And maybe you're making that money because you have an end goal in mind that you want to invest in something, which we'll talk about in a minute. So now let's talk about budgeting. Budgeting to some people feels like the handcuffs are on them. It's like, I don't want to have a budget. But to me, financial literacy with respect to being in a budget meant that I would never get caught off guard. I would never have to feel stupid if I was out with my friends and we were at the mall and they said, let's buy these $200 shoes. I knew what my budget was. And so I never had to feel like pressure to do something or pay for something and worry about, or should I say charge something and worry about how I was going to pay for it later. And so budgeting for me gave me permission to be able to spend money because I knew exactly how much I had to spend and I never got caught off guard and I never felt stupid. Budgeting is really, in its simple terms, just keeping a ledger of how much money you have and how much is going out, but more importantly, how much is expected to go out, because you have certain bills and certain expenses that you're going to have to pay for every single month anyway. So if you could just put that on a piece of paper, you could put it in an Excel spreadsheet, just have a general idea of, if I make $2,000 a month and my gas, my rent, my car note all comes to $1,200, just having that concept that I'll have $800 left over. And then I have to chop that up and say how much is going to food, how much is going to date night, how much is going towards a new toy or outfit or something that I want. But just knowing those numbers gives you confidence, and you walk a little bit different when you understand what's going on with your money. Let's talk about financial literacy from a spending standpoint. One of the things of my mindset with spending with relationship to financial literacy was, I always knew early on that I had to decide my needs versus my wants. But I want to go a little bit deeper than that. See, when I was in college and people were buying new cars that I knew would put them in a bad financial situation, because I knew how much money they were making. We were making the same at the same jobs. And I'm like, how can you afford that? Because I did my budget and I know I can't afford that car. And so I knew that they were technically, I call it mortgaging their future. And mortgaging your future is saying, like, I'm going to enjoy this car or this expensive thing that may be outside of my budget right now, knowing that I'm going to have to work two jobs for, or know that I'm going in debt, meaning I'm going to have to pay for it with future earnings, with money that I haven't even made yet. And so people would spend money on things that they were mortgaging their future, meaning I'm going to have to work. I'm already spending next month's money so that I can enjoy this car. And that was not a good scenario once I understood about spending on my needs versus my want. I'm like, I want that, but I also don't want to mortgage my future or commit next month's paycheck to having fun with that today. And that's just a financial literacy thing. It's like understanding that maybe buying that thing that you can't afford today means you're committing to spending money you haven't made yet. And the problem that we can get into with that is sometimes you'll commit to a 2-3 year car note, for example, just to enjoy the car today, knowing that maybe it's a little bit outside your budget. And then what happens is you say, well, as long as I keep making this much money on commission, or as long as, nothing happens with my job. Well, what happens if 6 months or 12 months from now you get laid off? And so you've counted on that future money that now a layoff, or maybe you got fired or downsized, or maybe the economy slows down and you're not making as much commission, or you didn't make the money you thought you was. Or I've seen people say, I'm gonna get a raise, and they start spending the money as if they got the raise already. And then if they don't get the raise, or the company for whatever reason can't give you the Christmas bonus, you're like, I already spent that money. And that's where financial literacy comes in, understanding what you need versus what you want. And then also understanding that if you spent that money before you have it, the cause and effect of making that decision, if something happens and you don't get that bonus, it puts you in a bad situation. And that's what they mean. And that's what we mean when we talk about financial literacy. It's just thinking ahead and say, what are the things that can go wrong from making that decision today to buy this car or that thing, and spending Christmas bonus or tax season money? And what happens if you don't get as much as you thought back from taxes? A good way to kind of tackle that is saying, like, what do I absolutely need? And then let's budget for that. And then what do I want? And let's budget for that. So maybe you want that car, or maybe you want that purse. And if you know you have an extra $800 left over every single month, and it's a $2,000 purse, you say, well, maybe I'll wait 2 months to get the purse, or 3 months. I'll wait 2.5 months technically to make the extra $2,000. I'll not spend my extra $800 for 2 months. That'll be $1,600. And then month 3, halfway through, I should have enough to get that purse. And now I'm not mortgaging my future. I'm not spending tomorrow's money today. I'm sacrificing today, and I'll get the purse tomorrow, and I'll be in a great financial situation. So that's something to think about when it comes to spending. And the last thing I'll say about spending your money in the needs versus wants is you also have to think about, what do you want today versus what do you really want tomorrow? You see, I remember thinking about, I really wanted this Monte Carlo car, but I thought, if I blow my credit, if I go into debt right now, I won't be able to get what I really want later, which is a Ferrari or a Lamborghini. And if you've seen, I've gotten my Ferrari delivered last year, a couple years ago, and I finally was able to achieve some of those dreams. But I think I wouldn't be able to achieve those dreams if I blew my credit back then, or if I kind of messed over my money and never got a chance to get into the stock market because I wasn't financial literate back then and made those early on mistakes. By the way, if you're enjoying this video, give it a thumbs up and hit the like button, and consider subscribing to the channel for more videos like this. Now let's talk about financial literacy topic number 4, which is investing. And so the mindset around budgeting and putting some money aside for investing is that when you think about how you make money, we talked about most people trade time for dollars. Well, there's only 24 hours in the day, and there's only one of you. And so I learned and realized that wealthy people figure out, how do I make 3, 4, 5, 6 versions of me that are working 24 hours around the clock? And one of the best ways to do that is to invest. And so when you think about your money, if you make $2,000 a month, we'll just stick with that example. But if you can get maybe $10,000 in an investment account, and that investment account is making $2,000 a month, you have just successfully duplicated yourself. You have created another you that is making the same amount of money, except you're not working for it. And so that's the mindset around investing and why you should consider investing. It's a financially literate thing to do from a standpoint of, how do I make more money without sacrificing more time? And you can have your money work hard for you in things like the stock market, which was my choice to really go into that field. But you could also get into real estate and buy your first property. And every month when someone pays that rent check, you're closer to duplicating yourself and making the same amount of money that you make on your 9-to-5 job. The other thing that's beautiful about investing is your money doesn't get sick. Your money doesn't go on vacation. Your money doesn't talk back. Your money doesn't catch COVID, right? Your money doesn't, have kids or go out on maternity leave. And there's nothing wrong with that. But I'm just saying, your money doesn't do any of those things. Your money doesn't fall off a roof from hanging up Christmas decorations, all right? Your money does none of that stuff. It just goes where you send it. And if you send it to the right places, it usually comes back and brings some friends to the party, which means it made some more money. So I want you thinking about that from a financial literacy standpoint. And then the fifth thing to understand about financial literacy is just a general understanding of how money works. And when I mean a general understanding, I'm talking interest rates, I'm talking credit cards and different payments to different things. One of the things that I learned early on, and I'm not sure where I heard this example from, but maybe I was just really into numbers and math. And whenever I heard this example, it made sense. And so when you look at your car insurance, for example, this is a good one to just understand in general how money works. Most people, when they get car insurance, and I was this way too, when I first got my car insurance, the number one thing I said was, what's the lowest deductible that I can have? And so typically the lowest deductible that you can have is about $500, at least if you're here in the United States, that's about the standard. The lowest deductible is $500. But what I understood was, or should I say what I didn't understand, was that there was a second tier, and it's $1,000 deductible. And I used to say, oh no, if something goes wrong, I don't know where I'm going to get $1,000 from, but I can come up with $500. But here's the thing that you have to understand about money is when I looked at the $500 deductible and I looked at how much I paid every month, and then I looked at the $1,000 deductible, the $1,000 deductible would save me $50 a month. Now that doesn't sound like a lot, but over 12 months, that would save me $600. So then I had to ask the second question. When was the last time I've been in an accident? I looked up and said, I haven't been in an accident in 5 years. So you mean to tell me I could be saving $600 a year for the last 5 years? That would have gave me an extra $3,000 to invest. I could have even set aside $1,000 for the deductible. I could have done a whole lot of things with those $3,000. And so when I really think about it, it's like, is the $500 deductible the best way to go? Or is the $1,000 the best way to go based on the fact that I haven't been in an accident in the last 5 years? And things keep going this way, I won't be in an accident for the next 5. But here's the thing. All I have to do is not be in an accident or have an incident for 12 months. Because the moment I get $600 savings, even if I get into an accident and had $1,000 deductible, I only have to come up with $400. That's actually $100 less than going with the $500 deductible, because I save $50 a month times 12 months. I save $600. And if I crash or get in an accident, it's $1,000 deductible. Well, I got $600 and it costs $1,000 to get the car fixed. I only have to come up with $400. So I realized all I need to do is make it through 1 year, and it's a way better deal than having a $500 deductible. And so that's what I mean by just understanding, having a general understanding of how money and how finances work will help you become more financially literate, and not just thinking, what's the lowest I can get? Because sometimes the lowest deductible or lowest price may not actually be the best thing for you. And it just takes thinking about your finances and say, if I go with that one, what's my payments? If I do go with this one, what's my payments? But if you take payments out, the real question is, if I make this decision, how does that affect my finances? And if I make this decision, how does that affect my finances? So as you think about financial literacy and the mindset around it, it's not whether you're smart or not. It's not whether you went to school for something or not. It's really about just taking a step back and saying, if I make this decision, how does it affect my finances, good or bad? And if I make this decision, how does it affect my finances, good or bad? And then which one of the 2 or 3 scenarios is the best, puts me in the best situation financially, based on my lifestyle, based on my current spending patterns, and based on my needs. So I hope this helped wrap your mind around the mindset of financial literacy. Also, check out the next video where I go deeper into the categories and different things that you need to think about with respect to the 5 categories. I'll see you in the next video.